Let's talk about the Wilkes Barre Scranton apartment market. If you live in the area, you might be feeling this really weird disconnect lately. On one hand, rents are still at an all-time high, right? But on the other, that frantic gotta find a place now energy from the last few years, it's just gone. So what is really going on? Let's break it down. And that's the big question, isn't it? If you're a renter or a landlord, you've felt the shift. The numbers say prices are high, but the feel of the market, well, it's just got a lot less horsepower than it used to. That feeling, that sense of a market losing steam, is exactly what we need to unpack to figure out where things are headed. You know, in a market like this, one with a lot of older buildings and not a ton of new construction popping up, the sticker price on an apartment just doesn't tell the whole story, not even close. We've got to look deeper, at the market's momentum and that subtle shift in the balance of power between renters and landlords. That's where the real story is hiding. Okay, so to really understand what's happening right now, we need to rewind. We've got to look back at the absolute whirlwind of the past few years. It was a time that pretty much rewrote all the rules for this market. Think about it. Before 2020, this was your classic slow and steady kind of market. Rent changes were modest, they were predictable. You didn't see any major shocks or sudden spikes. It just had this stable, reliable rhythm that had defined the area for years. And then everything changed. Starting around 2020, a huge surge in demand just slammed into the area. And this wasn't some gradual shift. It was an abrupt, pedal-to-the-metal acceleration. A lot of this was driven by big economic changes and people just wanting different things, looking for more affordable places with more space, and that suddenly flooded areas that just weren't used to that kind of attention, all leading to this incredible peak in rent growth. And on the ground, the effects were intense. I mean, all of a sudden, finding an apartment turned into a competitive sport. Vacancies just evaporated. Landlords, who for years were used to making these small, careful rent adjustments, suddenly had all the pricing power. But it wasn't just that rents were going up. It was the speed at which they were going up that was so staggering, which brings us to today. Because that period of crazy acceleration, it's over. We've hit a critical turning point. The market fever is finally breaking, and believe me, a new phase is starting right now. To really get your head around this, let's think about it in a different way. Instead of focusing on the dollar amount of rent, let's imagine we're looking at the rate of change. Basically, the speed of rent growth. It's like looking at a car's speedometer, not its odometer. The speedometer tells you how fast you're accelerating, and right now, that's where the real story is. So, just a couple of years ago, the needle on our imaginary speedometer was just pinned redlining. Rent growth was accelerating deep into double-digit territory. The market wasn't just moving forward, it was flooring it. That was the absolute peak of the frenzy. Then something really critical happened. The foot came off the accelerator. The rate of growth, that speed, it stopped getting faster. It hit a plateau. Now, rents were still high, sure, and in some cases still inching up, but that explosive upward momentum had stalled. That was the turning point. And that brings us to where we are right now. The speedometer is slowing way down, returning to a normal, sustainable speed. Now, to be really clear, rent growth is still positive. Rents are not falling, but the pace of that growth has cooled off dramatically. We're getting back to those modest, single-digit increases that were totally normal for this market before the big surge. So, here's the absolute bottom line. The underlying momentum of the Wilkes Barre Scranton apartment market has fundamentally changed. The era of explosive runaway rent hikes is behind us. We are now in a phase of stabilization and, frankly, normalization. This whole shift to a slower market really shines a light on a common misunderstanding people have about how markets like this actually work, especially when you start talking about supply. So here's the myth you hear all the time. In a market with very little new construction, rents have no choice but to go up and up forever. I mean, it sounds logical, right? But it's missing half of the equation. The reality is, while supply might be fixed, demand is flexible. And when that demand starts to cool off, it eases the pressure on prices all by itself. And that is exactly what happened here. The cool down we're feeling is not because a wave of new apartment buildings suddenly hit the market, because, well, there wasn't one. This entire story, both the wild surge and the current slowdown, has been all about demand. We're simply seeing that wave of renter demand pull back to a more normal, more sustainable level. So what does this all actually mean for you? Whether you're a renter, a landlord, or an investor, the rules of the game have changed. So let's talk about the new playbook for navigating this more stable market. For renters, honestly, this is good news. The days of showing up to an open house with 20 other applicants are fading away. You can expect a lot more stability, way less competition, and just a little more breathing room to make a decision. Your power to negotiate is slowly coming back, maybe not on the rent itself, but on things like lease terms or parking. The pressure is definitely easing up. For landlords, the strategy just has to shift. The era of just automatically tacking on double-digit rent increases for every renewal, that's over. The new focus has to be on keeping the great tenants you already have, and that means investing in being a great landlord, responding to maintenance quickly, keeping things clean, and just providing excellent service, because finding a quality replacement isn't a sure thing anymore. And for investors, the message could not be clearer. You cannot look at the incredible performance of the last few years and expect that to repeat. It won't. That was a once-in-a-generation demand-driven event. Any forecast based on that period is already out of date. You've got to adjust your expectations to reflect a return to modest, historically normal growth. The game is about long-term stability now, not short-term windfalls. So, to wrap this all up, the Wilkes Barre on Scranton apartment market isn't collapsing. It's not crashing. It's normalizing. And in this new environment, success is just going to be defined differently. It's a market that's going to reward patience and a clear-eyed view of the new reality, and it's going to punish anyone still operating on the outdated assumptions of the frenzy. Thanks for tuning in.